Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the own goals keep on coming for the US. But first, the overnight dairy pulse auction came in with the opposite result signalled by the derivatives market. The skim milk powder price was expected to bounce back after the weakish full auction event the week before, but basically it didn't. And the whole milk powder price was expected to fall sharply. It did fall, but it was a minor one in the end. So these pulse signals ended up changing little. Last night's 2025-26 Australian budget didn't deliver any real surprises in the end, although it is clearly an election budget. But it is one where the dominant challenge has shifted from battling inflation's effects to preparing for global trade instability and great power rivalry. Australia is facing being abandoned by the US, while also faces rising security challenges from China. Although they're facing budget deficits that could be as high as 1.5% of GDP next year, and probably ongoing deficits for the next 10 years, they are accepting that, as they announced new spending of about 35 billion Australian dollars, with much of it focused on cost of living support, some modest tax cuts, and defence. There is a rise in off-budget spending as well, so their funding program will be growing fast. In the US, last week's Red Book retail survey showed sales held up to be 5.6% higher than year-ago levels. However, with inflation rising, and quite quickly now, it isn't as impressive as it was in 2024 when inflation was basically under control. Those fears of returning inflation from tariffs are behind a tumble in American consumer sentiment, reversing to lows not seen since the last Trump presidency. The Conference Board's survey of expectations was particularly hard hit, and now sits at a level they say indicates recession ahead. This survey backs up the earlier University of Michigan one. And ratings agency Moody's is warning that even in the best scenario, the US's situation is likely to get worse under the current policy direction. But not all sectors are drooping. New dwelling sales are holding at average levels, up 1.8% in February from a month ago, up 5.1% from year-ago levels. But inflation might be behind this small recent demand rise. That is, buyers getting in before inflation hits existing stock and before interest rates rise again. But the next regional Fed district to report is saying things in their mid-Atlantic region are slowing. The Richmond Fed's factory survey has yawed from a small expansion to a moderate contraction in their March survey. Observers had expected the measure to rise to a faster expansion, so the variance is notable. New order levels fell, and prices paid for imports rose faster than expected. The clearest example of this is new record high prices for copper. An interesting phenomenon has developed in US equity markets. Retail investors are turning bullish, driven partly by their political bias. At the same time, professional investors are taking advantage of them and are net sellers. Their northern neighbour is talking about retaliatory export taxes as a way to get Trump to talk to them seriously. Their combination with American tariffs isn't going to help anyone. In Indonesia, their currency crisis is deepening, with the rupiah now at its lowest since the GFC. In China, their central bank has adjusted how it raises funds via its medium-term lending process. This may be an important change. The US Treasury 10-year yield is now at 4.30% and down 2 basis points from yesterday at this time. And the price of gold will start today at just on $3,026 an ounce, up a net $17 from yesterday. And oil prices are down 50 US cents at just on $68.50 a barrel in the US, while the international Brent price is $72.50 a barrel. And the Kiwi dollar is now at 57.4 US cents and up 20 basis points from yesterday. Against the Aussie, we're down 10 basis points at 91 Australian cents. Against the euro, we're up 10 basis points at 53.1 euro cents. That all means our trade-weighted index starts today at just under 66.8 and actually little changed. And the Bitcoin price starts today at $87,803 and down 0.3% from yesterday. Volatility over the past 24 hours has been modest at plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.